Good morning, everybody. It's Dan Basse and Ben Buckner back with you. It's Wednesday, the last week of August. We're heading into first notice day against September contracts on Friday. We've also got news out of China in which they're starting to offer soybeans from their reserve. This is really unusual since the Chinese typically don't offer soybeans from their reserve until they get into the spring. They do that for seasonal purposes to kind of bridge the gap. But this year, because of the concern over the United States not selling any beans to China, China's buying from South America, and they may be willing to bridge the gap with reserve sales then for November, December. I find it very interesting. Again, kind of another telltale sign that the Chinese are avoiding the U.S. market. But let's see how it all plays out. Other than that, the market's watching weather very carefully. We're still a little dry across portions of the Midwest. But Ben, kind of fill us in what you're seeing and what you think. My own views is we're still in bear markets here. But again, the bean markets had a recovery back towards the old highs. We'll see how this carries through.
Yeah, I think that's right. The bean market has been kind of flopping around recently. And I think that makes sense for now. But to be very clear, our stance at Ag Resources, the Chinese demand, annual export to soybeans are going to trump yield, whatever that may be. But in the short term, we do have forecasts that just kind of fail to bring in additional rain into the eastern Midwest, in the first week or first 10 days of September. So what you're seeing here is the European Ensemble Models 2-week forecast. It's done the best still. And you kind of see that there's just not a lot in places like eastern Iowa, Illinois, Indiana, Ohio. So if that's the case, you just got to contend with net draws and soil moisture through this period. This will be offset to some extent by pretty mild temperatures. And also notice that you got a pretty decent amount of rain west of the Mississippi River. But I do think this is something that market's going to continue to watch as we approach the USDA September yield. So weather mixed, not perfect. I think that's something that's lingering in the background of the soy complex this week. But other than that, and I know kind of our input's been pessimistic, but we want to show you why that is and why it's important to acknowledge the landscape of the global agricultural space. And so something that has really helped us, maybe this is priority number one at Ag Resource, especially in the last 12 or 15 years, has been just watching global cash markets. And I think the wheat market, which has still been the dog of the space, rightfully so, because the Russian and European markets are moving lower, they're not moving higher. And you can see here counter seasonally. So on the left, we've just got seasonal trend, percent change in the spot Russian FOB wheat price from July 1st to June 30th. We had a pretty tight market briefly there, but I think that market is starting to open up. And I think what we've noticed is, one, the spot price of Russian wheat to the importer has dropped about $8 or $10 per ton in the last week. This price is also dropping despite them finding better export demand. So that is a bit unusual. So we're going to get into this week. The Russian market moving forward does look to loosen up pretty considerably, to the point where if we're going to meet USDA's forecast for exports, which I think is correct because you are seeing crop estimates rise in Russia, probably Russian exporters are going to be forced to export all-time record amounts of wheat, call it from October to March 2026. And how do they get that done? I think it's something that's going to be a drag on the wheat space almost indefinitely. And to the right, you can kind of see we still don't have evidence that world trade needs to be revised upward. In fact, it probably needs to be revised downward. Europe, the European Union, has exported, just under 3 million tons of wheat in the first 2 months of the crop year. That compares to about 6 million tons a year ago. And if you extrapolate this, it's early, but the USDA's export forecast for wheat in Europe is 10 million tons too high. So I think world wheat markets are going to work to find demand, and that's what we're seeing at the Board of Trade as well. Interior U.S. market too, I think they're pretty critical. And so we have seen a net weakening just in the last 48 hours, and especially in the last week. And now, granted, we are rolling from September to December, so that explains some of this. But if you look at a major market like Decatur, Illinois, you've gone from 15 over to 10 under in the last couple of days. And even accounting for the carry, you've lost a few pennies in the spot price of corn in central Illinois. And it's not just there. We can look at Kokomo, Indiana, Boone, Iowa, losing 2 to 5 cents if we just look at October bids there. So the cash market does seem to be prepped for, again, what's locked into the all-time record corn supplies. And so cash markets, I think, are going to be more of a focal point not only to us, but I think to daily price discovery moving forward as harvest approaches. Something else that has jumped out to me this week when we think about corn, and I don't think that looking at U.S. corn production of 16.5 billion bushels, that is more or less known. But again, it's the other side of this. It's how do we get rid of this stuff? And we are going to see, I think, more competition for corn in the import-export space. So Ukraine's corn market today is more or less dead. It doesn't exist. It's very, very expensive, hard to buy. But we've seen more and more reliable, consistent offers for October delivery, and those are competitive with the U.S. and South America. So the spot premium Ukraine's $2.50 over Board of Trade, but if you go out to October, it's $1.25, $1.26. That eats on a landed basis to a lot of places with the U.S. So that's something that we didn't have to contend as much with last year. Ukrainian production will be up 2, 3, maybe 4 million tons from last year. You're starting to have this overburdened world market. And I think Dan, you made a good point yesterday that the U.S. this year kind of created another Argentine corn crop. So that's just the size of the change in U.S. production year over year. There's a lot of corn that needs to find homes, come September 1st onward or so. Kind of lastly, there are a lot of crop tours going on. I know Pro Farmer, I think rightfully gets all the attention just because the number of samples they collect, but there are numerous crop tours all over the Midwest. And so what we've done, this has really helped us, fine-tuning by state yields, is compiling 14 crop tours that tour Illinois specifically. 6 of them have reported so far. They've been variable, but I think the last 4 or 5 have confirmed the USDA's number. So as we're fine-tuning this model, it does look like NASA's initial all-time record, 221 bushels an acre yield forecast, right in the ballpark. So maybe we won't see a big change in national U.S. corn yield in September, or maybe by January, given this kind of cool, wet in the western Midwest. So again, I think we're locked into having pretty sizable corn supplies. Cash markets are starting to tell us that we're transitioning from supply focus to the need to find demand growth, and none of that seems terribly bullish. So I agree with you in that we're still stuck in the same trend of, from a very high level, do the markets need to ration supplies or find demand growth? And I think very much so they need to find demand growth.
Yeah, good rundown, Ben. I think the markets, are going to struggle. And unlike last year, when we bottomed the corn market in August, I think that bottom, to your point, is going to be October, November, just as we need to get rid of the supply and kind of work things out. Everyone have a good trading day here on Wednesday. We wish you the best. Thanks for the wonderful rundown, Ben, and we'll be back tomorrow. Be well, everybody.